Everybody wants to get smart. I'm here to make things simple for people. It's one trade. It's a macro like trend that you've never seen before. Don't sell. The only thing you do, gold, silver, platinum, miners. Everything else is tempting you because you think it's cheap. Gold looks expensive. It's going to get extremely expensive if you think this is expensive. Silver looks expensive at $50. It's going to get extremely expensive. 80% sometimes of the move is made in the last 20%. This is what a parabola is all about. That's why I'm saying don't get off the train. The party gets hotter the deeper you get in. The naked girls only arrive after 12 o'clock and the free drinks. You know, you're just having a nice ride and they're being polite and serving you the odd canape and champagne now. The beatbox, the DJ, the high-flying shows are all starting when you get into Twilight Zone. And you want to be on the party bus when that goes down, because that's when you really get to be happy.
You're watching CapitalCosm. My name is Danny. It is October 7th, 2025, and my guest today is the market sniper himself. It's Francis Hunt. Francis, thank you so much for coming on, my friend.
Delighted to be back with you, Danny.
Yeah, you and I were going at it for about 30 minutes here, just looking through all of these stock charts, but precious metals are ripping. Gold has hit that $4,000 mental barrier, at least on the futures market. Silver's at $48. Things are blowing up, Francis. Where do you want to start?
Wow. I mean, where to start? There's a couple of key points in this video I would feel remiss if I didn't transfer across. It's how do you saliently say something that in concise manner, because I'm typically long form, that actually passes on a concept fully to the listener that is of use and value to them, a framing. And one of the key things I want to pass on to all your listeners is we are in an early and even mid-stage breakdown, fragmentation, and destruction of a basis of account. So when I refer to the debt fiat system, you are in an inverse parabola going down like that. I called it the convexity or the bankruptcy curve. Think Ernest Hemingway, slowly at first and suddenly very fast.
Yep.
It's the exact opposite of the gold on the quarterly chart. If you hold a gold on the quarterly chart up, and I'll show a couple of images just so that I'm not drawing with my hands here in a minute. But the basis of account is being destroyed. So everybody thinks, oh, stock's gone up, this gone up, that's a melt up, hey, I'm making money. You're not. You're not meaningfully. I call it nominal normidom. The only basis of account you can use in this time is what is that asset divided by gold? 1 ounce. How much do you get on it? That is how you measure your wealth right now. There is no other measure. Stop talking in dollars. Stop talking in euros, pounds, yen. Goodness gracious. You can't do it. There is a fiat and debt debasement process, and in our convexity diagrams, that bankruptcy curve, the inverse parabola, all the different names I give it, you are now in the contagion accelerating phase where weeks, decades happen in weeks, the famous saying. So you are there now, and gold is the blowing whistle for it. The only thing that is showing you truth is the gold price. And it's on the futures, you mentioned the 4K run, and on the cash markets, you're within spitting distance of 4,000. In November 2024, we called once, twice, 3 times, and then a lady at 2,000. So you're nearly 100% up in a year and a bit, a handful of months.
Yeah, there's a nominal value and there's a real value to things. Yeah. And you make a great point. We may continue seeing the stock market go up, but in what terms? In terms of dollars? Sure. But if the dollar's going down the toilet, well, why does that matter? You were telling me earlier on before we hit record that we've essentially lost our accounting mechanism. If everything goes up in dollar terms, how can you account for anything in dollars?
You can't. And everybody else who's talking about Mag 7 or AI or stinky stock market, this or other asset classes is missing. Is as I say, people arguing about the color of apartment on the 9th floor as the foundations are collapsing and the building is in a controlled demolition of intent. There are no other asset classes that matter. It is not a collapse. This is the other point I need to make that goes hand in hand with the first point. We are losing our basis and measure of account. The other point that goes hand in hand is that a stock market collapse is one thing. Yes, okay, a couple of retail over leverage get cleaned out. People stop buying holidays and fancy cars for a while. Bit of a recession, rate cuts, repump and go again. A fiat and debt-based collapse is the basement of the pyramid. Stock markets are all built on top of this. You never lose your foundations when you have a stock market collapse. A bit of fluff, a bit of froth gets skimmed off your pint.
Yep.
This is the whole pint being smashed into your head with the beer in it, and you're falling on the floor with a concussion and blood trickling over your eye socket into your mouth, and you're dazed and confused, and you can't even face standing up and walk in. You do the chicken dance. This is the next scale, and the people that don't see it and get smashed full ball by the bouncer holding the mega, billion pint mug, that don't see it coming are completely legless. This is our most famous, most watch is the polarization call that we said in 16. And there's probably going to be less than 9% that come out of this wealthier, and they're going to be immensely wealthier, and the majority come out of this poor. Because
and it's already taken place here, Simon. Not Simon, Francis. It's already taken place, because if you look at this chart, you've got the S&P priced in gold. And obviously what you notice is that we are nowhere near an all-time high. The last time we hit our last all-time high was in 2000. And we're actually in the process of devaluing in the S&P relative to gold.
Yeah, you're actually making a nice little head and shoulders there, your rising wedge aside, but it's also a possible jaw as well. The only blow off, so everyone who talks melt up, the only melt up on the chart you just showed was that which ran into 1999. That was your melt up. And in terms of general market conditions, I've got a great chart. I'll use the Dow because we have a lot of history, and I've annotated this one, and it's a discussion piece, and I got a lot of traction with it when I showed it on Twitter. So I just want to show high value things that I know will make people think. And this one goes like this. And I'm going to come at you on the share screen there and let you comment on this. This is any delusion that you had about the banking cartel bringing, stability to the market should be lost when I show you this. So if I just share the screen. So we're looking at, when it comes up, the Dow Jones since 1897 divided by gold ounces. So again, your eternal benchmark of valuation that never lets you down. The true accounting measure that I've said you've lost because you're all hanging on to fiats is gold ounces. And there's been many crises for which this is actually just a blip. That's CV19 from there to there. 2009, this was into the lows of 2012. The whole 2009 thing was captured just by that. All you should see, if you're watching this, is a massive broadening structure of ever increasing volatility since the 1913 event of the creation of the Fed, which led to a pump straight away during these slightly tighter years, a boom, roaring 20s, and then a major smash down. And by the way, during that period, they funded the Bolshevik Revolution during the roaring 20s, so 16 to 17. They first had the World War I. So 1913, the Fed. Titanic sinks. Just before that, they get the Federal Reserve in after that, the creature from Jekyll Island. I've been there, I've YouTubed from there. Then you get World War One, which is 1415 essentially. Then you get the roaring post-World War One roaring years, along with the Bolshevik Revolution, which was funded and supported by the US, who even sent troops to Russia to keep rural people out from supporting the Tsar, who the bankers had decided must be slaughtered and removed. You get the roaring 20s, you get the depression crash years. 1.88 ounces of gold bought you the basket of the entire Dow. It was at 1863. You then got the reflation of equities, everything, into the peak that was 1966. The war, note how you got war, 1930s, early 30s, World War II, 36 to 45. Reflation, 28.47 ounces at the high, 1966. Then began the early inflation, deep into the stagflation that ran you through the fiat decoupling of 1971. You had a bounce after that, and then a further shakeout right down into the 80s gold high. This was Vietnam War. That was World War One. And you also had then into that 0.99 of an ounce of gold, less than 1 ounce, bought you the whole Dow in 66. Stagflation, sideways, everything. Volcker killing the bond market, surging rates, resetting, clearing out all the debt. America was still a tour de force nation. He did it. People forget that farmers came into New York like a French protest. It's only time. Very unpopular measure. Only in 98 did you cross the previous high from 66. A 32 years to recovery. Okay, the Dow doesn't include dividend reinvesting. I should say that. You would be a little bit sooner if you'd counted dividends being reinvested. You go to a high of 45 gold ounces to buy the Dow in 98, 99. Gold was just $253, $252. Peak equity markets, that's your melt up, which included the NASDAQ, the dot-com boom into all of that. And since then, the equity era is over, you're in the gold era. This is long cycle. We've had a down leg into the lows of 2012, which was QE1, 2, and 3. This is your world and economic history for you right here. We also, don't forget, had the war that was 9/11 that led to Iraq, Afghanistan, and everything else they persuade. The semi-reflate into 2006-17 when China had the Shanghai Accord in 2016, end of everyone indebted, everyone now a leper, because China was creating heat in the economy and buying everything and building everything when we were post-subprime. They did the same. You had your CV19 strike, you had a rally, a lower high, and since then you've been rolling over since CV19. Bond market trading down, interest rates climbing up, money running into gold, the substitution, reserve asset substitution. The one was never a reserve asset, but they cleaned the decks under Volcker that they got a 40-year bull market. That's now over. We called it late 2020. Druckenmiller and Tudor Jones confirmed it in 2024. Now you have an overshoot to the downside. If you look at this, Danny, we have run 12, the gray line there. 12 ounces to buy the Dow. Every time you run that, bar one, you went into an extreme low on the downside, heading down. Mm-hmm. Every time, except here you got the one rally, which I say is a bigger version of this zigzag. You get the dope rally, which is the AI everything bubble rally. But it never takes you to the previous. It's a lower high, and you're in this process of lower low. So, but for this period, which is still part of the same move, this is the confirming breakdown. That is a rally in a bear market for the Dow in relative terms. That is a flag. That is a breakdown. There you go. I can even draw the flag for you. It's in a log scale, and we can project it to the downside. You go lower than 1 ounce again to buy the Dow. That's when you get out of gold, and you can buy stocks, not before. And
Are you able to extrapolate? Are you able to extrapolate how low it goes from here?
I think my guess is, yeah, this is your broadening structure. You visited this low every time. The scale has just got ever bigger. So that's the bear flag to 2.87. But I expect you'll bounce and then further lows into that. So that could probably happen. You know, you'll be in the 2030s for that. But I think you'll be well on your way through this orange box, probably 50, 60% before the 30s. We're busy making it now. Things happen quickly. Watch how this got really fast. You're talking literally in a year. You would have gone from 22s, and next thing you know, you're at 3s. The combination of nominal corrections in the stock market being possible and melt-ups in gold. That flips that thing horrendously. So you're sitting in stocks. Again, it's arguing about the paint on the wall inside the apartment on the 13th floor as the foundations are imploding. That's what stocks represent to me. I don't want them unless they're mining stocks. That's the only thing. And make sure you have your certificates for the great taking.
What's the current ratio at?
11.71. You've broken the 12 to the downside. You've broken the 12 and this 12 was interesting because, you know, it technically showed itself to be relevant for quite a long time on the way up. You can see a couple of times you bounced here. You did a return move here. Always broken with momentum on the downside. You bounced here over there. You bounced here again. You see, you went right up, back up to there. Then you came back and you bounced again. Then you let go. You went up fast and then you slowed down into a grind here. You see it there. You supported there. You see it. You got a hammer. You traded right down and you triggered it. You got a rally. And now you're breaking the second time. That 12 is a key level. You go sub 1. And some of that could be nominal downside for the Dow. A lot of it is going to be the gold appreciation. A lot.
Yeah. And so we've talked about gold. What about the other key natural resource, which is oil, probably called the master resource? There's oil's at $61. It's nowhere near, close to its all-time high. Like gold is making new all-time highs. Is oil a better play than gold at this moment because of how relatively subdued it's been?
Short answer, 100% no. So again, this is our home domain. Everyone's talking about this now. We were talking about it a year and a half ago and calling exactly this. June and April of 2024.
So this is the gold to oil ratio, correct?
This is gold divided by oil.
Okay.
This was 129 oil. 14 barrels you got for 1 ounce. This is the inverted head and shoulders. And by the way, this is a doppelganger of the exact same successful call we made when we called single-digit oil in 2019, 3 times, once on a stage in 19 and then again in February of 2020, all at $60+, which is where we are now, 67, 65, 63 in August, November, and then the next year in February. And this is exactly the same. You've already made and had a pullback at our targets. The biggest pullback move you've had is here. This is a secular reversal. Everybody wants to get smart. I'm here to make things simple for people. It's one trade. It's a macro like trend that you've never seen before. Don't sell. The only thing you do, gold, silver, platinum, miners. Everything else is tempting you because you think it's cheap. Gold looks expensive. It's going to get extremely expensive if you think this is expensive. Silver looks expensive at $50. It's going to get extremely expensive. I've just sent a big sum paying with VAT, $62 an ounce for silver. I have no qualms. I'm handing fiat over hand over foot, but I will get some of that VAT back one day when I sell. I have no qualms at all. It's trading at 48. Don't worry me about it. I don't have to buy that expensive. I can buy in other jurisdictions without the VAT, but I want to have all over. This is a throw your fiat at every bullion dealer and keep stacking into this moon. $330 before you get a first major meaningful rest on the big time frame. So I'm not talking about it could be down for a day, a week, and even a month.
$330 silver? Is that what you're saying?
And then you go higher. Yes, and I'll give you the technicals for this. And the consumer is crushed. So the framing for oil, everyone should have, and it served me incredibly well. We've been one of the best callers on oil. I didn't choose it that way. It just turned out. Rockefeller tax, when the consumer is flush, 2006, 2007, they skim all your flushness and the liquidity that you're getting. You're refinancing the house, buying a car every 18 months, a new car, etc., etc. Oil, $149, $150. Wrecked consumer, oil right down. Lockdown, super wrecked consumer, very, very low. That is their skimming tax. So when they create liquidity for you on the one side, they take the froth on the other side back into their pockets. So Rockefeller, Standard Oil is Chevron. They're going in, they want the Venezuelan oil. It's also a lot of others, brands. BP and Shell is Rothschild. These guys own this industry, okay? And it's their thermostat for the heat in the economy. The two-tier economy of Main Street is wrecked. This is why we've continued to say it was a recession when you met the criteria of recession and the job numbers are a lie. You have $60 oil, barely holding, low 60s. The next number down is a 59. You're in the 50s. And that's on a dollar that isn't the same dollar when it was 150 in 2007. You're in fiat debt debasement times. Oil is performing terribly. Don't chase a bear trend when you're dividing by gold ounces. Your new basis of account, please think. We talk too much about dollar. It's a old monkey on a very greased pole. It's ending in the crocodile pit. Forget it. Stop. Don't do it. It's wrecked. It's over. We're in the parabola phase. This is the chart. This is the chart everybody needs to see. The inverse gold chart, which I will show you. The inverse gold chart, there was our credibility gap and the bankruptcy curve, how it looks. You are there on the fast bit. And let me show you a practical version of that in a document I was preparing. One sec, let's get that out the way and pull it down. This is the inverse dollar. This is your dollar buying power chart. There's your convexity curve. And it's in a major acceleration phase to the downside. You're in the fast phase to the downside. Don't talk dollars to me. What's gold? What's oil in gold ounces? Devaluing. It's not keeping. Wrecked consumer. Price of oil is dictated by the masses and priced at the margin. If you're not selling a lot of products, not doing a lot of delivery. We are in a reserve assets crisis where fiat and debt has too much liquidity and money in it, and it is fleeing. Everyone pointing out French rates up, German rates up, US rates up, Japanese rates up. 2 years ago, we were talking about Japanese rates. I couldn't get 100 likes on my YouTubes. The most boring thing in the world for everybody. Now everyone's talking about it. These are the memes that all your influencers are talking about today. The gold oil relationship, which we called a year and a half ago, is going to go through 60 when it was still sub 28 and had been as low as 14. And we said, that's a beginning of a reversal. It's the first target of a major cyclical reversal. And it was the second time we made that call on the exact same pattern, the previous time being CV19. The other thing they're talking about now, everyone's suddenly watching Japanese bond rates. The yen is in a deval, and it has to stay devaluing at least as much as the dollar because it's the wholesale funding mechanism and a slave nation of America. The conveyor belt runs, give me cheap money here, and I go into casino there. Japan provides cheap money there. And they're going to keep pushing it that way. And if the yen starts appreciating to the dollar as well as the rates going up, it unwinds the carry trade.
So how is it not already unwound? How is it not already unwound? Because it's been going up. The yield curve on the yen has been going up for the last year or so. And for as much as we can tell, the yen carry trade unwind seems to have been taken care of as of last year. Why is it not back centerfold?
So why haven't we had the unraveling? Because they keep devaluing and letting the yen get devalued. And if the dollar is appreciating to the yen, even though the marginal differential, the delta between what you can earn on a treasury in America versus what your borrowing rate is in Japan is closing, long term, that's a problem, especially if they flip at some point. I mean, it's a shock to say that because it's always been, or it gets close. It doesn't even have to flip. They get close because the banks are going to have some margin on anything. No one lends you at prime rate as well. So you're already the carry trade is already under pressure. But if they keep the devaluation in the yen, that shores up the lack of yield in the differential between the US rates and the Japanese rates, because your dollar can pay off more yen because the yen is weakening. In fact, we've got a call right now. We're going to 171 yen, and that triggered today. That's a community trade, which I'm happy to share with.
Hey guys, quick pause from the podcast, but this is something I feel is really important to let you in on. Back in 2020, before I even started this channel, I was looking for an edge, a way to find the big opportunities most investors never even hear about. That's when I found Capitalist Exploits Insider. From day one, it felt like I suddenly had my own team of world-class market pros working for me, digging up trades all over the world, doing the deep research, and handing me ideas that had massive asymmetric upside. Stuff that I would never even think about. Since then, my gains with them have blown past the S&P and the NASDAQ, and it's honestly the single best newsletter I've ever subscribed to. And that's not me blowing smoke. That's for real. I've interviewed their publisher, Chris McIntosh, more times than I can count. In fact, my latest conversation with him is linked in the description box down below if you want to check that out, as well as a pinned comment. And every time, I'm reminded why I've stayed a member for years. Right now, they're offering a special $1,000 discount on the Insider subscription, but it's only for CapitalCosm viewers, so you're only going to get it by clicking the link down below in the description box or the pinned comment. You're not going to find this anywhere else. Click the link, lock it in, and start getting the same game-changing research I've been using since 2020.
And I will, again, show you that trade because it's all part of this interesting, beautiful macro game. And it's fascinating. And this is, it has to weaken because the alpha that they were getting on the yield differential is closing. So that was the inverted head and shoulder. And by the way, that was the one before the COVID. Mm-hmm. These both played out. And the target isn't the end. It's the first stage. You got at 52, you went to infinity, essentially, naught. You went an infinite large number, not naught. I can't say naught, the other way around. Naught would be down. You went to 100,000, whatever number you want to say here. That was the reversal. So this, you don't rush in and buy the underperformer because there's a reason why it's underperforming, and that in a depression, which this will be, there's going to be even less consumption once everybody's lost their job. Oil's going to drop potentially lower, even though it's in debased dollars. But don't think of it in debased dollars. Think of it in the gold ounce. I've just given you a new base word for now. Stop using the word dollar. It's it's like talking about the Venezuelan bolivar and the Zimbabwe dollar. That's how you need to think about it now. Your benchmark, your new accounting benchmark in times where the current basis of account is currently being destroyed has to be something that holds value. Why not try that for the first time? Go back to that crazy notion that holds its altitude, the plane that holds its altitude. Everything else will be shown to be a parachutist who jumped out of the plane. So the USD JPY, which is where you brought us in, which is keeping the carry trade alive by debasing. You see, this could have been a head and shoulder. I drew it here as a possibility. That would have been an end of the carry trade because the rates are going up. You would have had a major crisis there. But we also said you break this and you're actually going the opposite way. So we're going to extend a little longer We aren't going to have the carry trade unwind now. We always worry for it and keep an eye out for it. And one of the key things you've got to watch is the currency. So this is a triggering event to the upside, and we're calling here with you live 172 as target, and you can get continuation on that.
What are we at today?
So that's going to keep the carry trade in the can as the long Japanese rates.
What are we at today, Francis?
So we're at we've just triggered at 150. You can see our entry is 150.9, now at 151. That's a triggering event for our trade. We were discussing this morning in the community. We've been watching this for a while. I was explaining this morning to the guys I'm now long, and it's now running. It's now running up. So I've taken a sizable long on that, and we expect that to be run before that date. But I want to show you something else that's interesting. So the USD, the devaluation in the yen keeps the carry trade for now in the can. Let's show you the US, no, not the US, the JP 30-year yield, which is the one. Now go look at our channel. We started our coverage on this at 0.2, saying this is going higher. We called these big setups way ago, right down here, and said this is going to crazy numbers. I even felt foolish by saying it because it was a 4 times in the rates at the time. You were at like 0.4. This is the yen. Now, right now, you're at 3.2 on the yen. Now, look at this minus. This is your problem. This yield is closing. So clean my face a bit there. Your problems come here when the difference in yield between the two is closing. This was a safe space down here. You are moving in a direction where the differential is no longer as big as it normally is. Let's just spread that out. You can see it a bit more clearly. These are your concern periods. It puts huge pressure on the carry trade here. And the only way you survive that is you have deval on the yen because you've lost the yield differential, especially for those that invested in treasuries. A lot of it might go in Mag 7 stocks and even higher beta stuff like that.
And this could spread as a contagion across the entire market?
Correct. And you went to a supreme low, which is typical of final lows, and you have a rounded bottom now for up. And you also, as a technical analyst, if I was breaking down this differential, have a beautiful, let's do it in a different color so it pops a bit more, left shoulder, head, right shoulder, breakout, a secular reversal that's going to have a target that's going to bring you up somewhere there. And it's a reversal, remember. It goes higher. You had a reversal here. That had a target. You can see how much you overperformed to the target. Again, shoulder, shoulder, head. That absolutely killed the target and went on to an extremity of overperformance, peak carry trade concerns. And that was 2020. That was your crisis, March 2020, when they cut rates so low on the US side. Now it's not a rate cutting thing. The reason you survived that is because the rates quickly climbed again on the US. This is about rates climbing and the Japanese climbing, not the US cutting. Different story, and that trend continues. Because you now go over to the Nikkei. What are Japanese people going to do? Let's say they don't understand gold, like they're not hearing the speech I've given you. This is where they go, most of them, if they live in a binary world where it's bonds or debt. This is where they go. They go into the Nikkei. What is the Nikkei doing? It's doing that. Oh, another inverted head and shoulders a la Francis, 74,000. There's influencers out there saying it's going to crash to 24. I'm like, on a devaluing yen, this woman that's come in charge, you have to view Japan as a province of America when it comes to the financial economic realm. The Fed has more power over the financial elements. What goes on in District XYZ about how late neighbors are allowed to make a noise That's a local issue to the Japanese. The big matter on finance and economics, Prof. Werner, watch our video, they owned. They're 100% owned, and they're forced to do currency deval, and they had very low, and they were ahead of the curve of America, and America has used them as cheap financing ever since. Borrow for cheap, pump your Ponzi. This is going to 74,000, but it's not a healthy 74,000 because the yen is going to be going down. This is hyper stagflation. Stagnation. Cost of rice doubled in Japan in a very short time frame. I don't have the exact number, so I don't want to speak out of turn, but it was almost 18 months to 2 years, a short time frame. So it's stagnation for the blue collar and the working classes, and even some of the middle classes. The asset rich are going to maintain some wealth if they're in the Nikkei. They'd maintain even more wealth if they're in gold. Look at this beautiful chart. You would think you'd want to be in it, and then I show up and spoil your day.
Divided by gold, right?
Normies. Don't be a nominal normie. Listen to Francis. He's kept it simple for you. You do one thing and you do it big. Divide by gold. There's your chart. Does it look anything like the same chart I was just showing you? No, sir. No, sir. Nope. Three-bag fools. And by the way, we've been all over this. And what does Japan and America have in common? Over-indebtedness. Over-indebtedness. First tier world, G7, G8, whatever number we're on nowadays. Over-indebted first world Western nation. US and Japan. What are they both in? Fiat devaluation, debt devaluation, pump-a-mental stock market. Oh, I'm so clever, I'm buying calls on the stock market. No, you buy calls on gold if you want to buy calls. You buy gold, it's outperforming everything on all of this. This is a reserve asset-based crisis. Who will be next? Korea, a smaller version. Maybe people will care less because Japan videos never got a lot of views. The currency is going to have a supreme devaluation, over 50%. The stock market is running there, Kospi. But is it running in gold terms? Again, you're going to be disappointed. That's what's happened in the last 3 months. The low of that candle was 2,200. You're at 3.5. That is in the same year. This is the beginning of the year. This is April, quarter one, the end of quarter one. To this year, you've gone from at your lowest point, 2.2, you're now at 3.5. That's 1,300 on 2.2. That's a 50% move in half a year. 6 months, 9 months. A 50% move. No one's talking about the Kospi. Everyone, NASDAQ, S&P, Dow. Divide by the gold. Francis's unit of account. In dire depression, hyper-stagflationary times, divide by the unit of account. That's your chart. So you can go by the Kospi, you can go by the NASDAQ, you can say, look at me, clever melt up. The only melt up in gold ounce terms was the run in from 94 to 99 in .com. Tech killed gold. It was the best asset category. I try position you in the best asset category to build wealth. It's a one-horse race. Take the fastest, most robust horse that's having very minor pullbacks and is marching on and killing everything else. The reserve asset, there is a fortune still in debt that's tied to currency that still needs to leave the devaluing debt market. When you have hundreds of trillions in the precious metals markets, or going into even quadrillions like you have in debt and the derivative markets, that's when you can start to say, okay, maybe I'll sell an ounce or two. Okay? You're going to sell too soon. The mistake you make is you're going to sell too soon because you're going to get sucked in like the normies, the nominal normies heroes, and your influencer on X. You got to sell now. Gold's $4,300. You can't tell me it's going to continue at this rate. No, you can't tell me how fast and how parabolic, inverse convexity, bankruptcy curve, every name you want to give it, the debt and the debasement of fiat is going. This is not like any other bull market you ever seen because you're now in a parabola of bust. That means the thing that doesn't go bust is in a parabola of hypervaluation in the measure that is bust. And people won't get this. They don't get this. They won't get this. This is scales of degrees that people will not understand, and they're going to make this mistake. And they're going to fish bottoms on oil stocks and oil and everything else. Right now, if you're in precious metals and miners, you are in the turbocharged Porsche Turbo S with even the battery pack. And you're just going to eat everybody. You've got four-wheel drive, you're eating them. Robot to robot, you're eating them. Top end, you're eating them. By every measure, you're eating them. Don't go and buy, yourself a Lada because they're cheaper. Okay? The game is winning. The game is winning and maintaining your wealth. That's the story, Danny. That's the story they're not getting because they have no basis of account. They remove all basis of comparison, error to error, with this perpetual inflation of a fiat that is debasing. People are confused. They are all nominal normies. Don't be a nominal normie. Your gold ounce is your friend. It is your new basis of account. Don't even mention the dollar. It's a waste of time. It's a fat old monkey on a grease pole falling into the crocodile pit. It's the bankruptcy curve. How wealthy are you in gold ounces? Talk to me about that. That's my basis of account. Get that into your head now. That's what they need to hear.
Is there any way that the controllers can still bring the price of gold and silver down, or have they fully lost control?
I think they will be very well positioned for this. They and the central bankers are part of that positioning. They are the network. They're the blockchain before blockchain existed for the banker cartel, your central bankers. They own shares in central banks. I know who owns the South African Reserve Bank. You can actually get that information. Rupert is one of them, and Rothschild, Rockefeller, known holding agents are the rest. You can find out this information. And what are they buying? Well, less so the South African Reserve Bank, but Russia, China are moving all the gold from the west to the east. You're even paying more in China because they're encouraging their citizens. There's a natural arbitrage even right here, right now. The wealth is being sucked out of the West. They don't have what they say they have. It is all moving in the wrong direction. You need to leave. It's going to be tumbleweed town. Another very unpopular message people won't get. A depression, a welfare state. The majority won't have prepared. They're going to be angry, hungry, and violent. And you have a highly diversified population. It's not a homogeneous, community-orientated one anymore. And getting rural may not be enough because the tax extraction, the scavenge mode. So here's another thing people need to get. So I've given two key messages. The basis of account is gone. Gold is your new basis of account. A collapse in debt and fiat markets is not the same as a collapse by scale of a stock market. A stock market is something much smaller layer that is much higher up in the pyramid. You rebuild up top there easily. This is a foundation. This is a sinkhole that swallows the whole pyramid. Okay. The third point I'm now going to say to you, they were always taxing you with inflation, but it was by sleight of hand and deception. It allowed them to sound generous when they gave you pay cuts, tax cuts, but they were always taxing you more than they were giving you cuts. They used over expenditure, often on wars where they enriched themselves, and issued new money. That's your inflation. That taxes everyone by sleight of hand. It's called inflation.
Yep.
When you overspend and you are proliferating, it's inflation. It's not the cost of your milk at the till. That's a consequence of inflation. So,
yeah. And just to be clear as to what you're saying here, Francis, just to be very clear, you're not saying these metals are going to go up in a straight line. There's going to be ups and downs because you have this and I have this on my channel too. We'll release a video. We'll talk about how bullish we are on something, on gold or silver or what have you. And if it's on a down day, you'll have these comments saying, oh, well, silver's down today, don't you? Oh, well, if that's the case, let's just pack it up and go home. It was down one day. I guess the thesis is incorrect. But what you're saying is we may suffer a slight correction, a correction of some sort, but the long-term view is to the upside. Is that correct?
What time frame are most of these charts that I'm showing you? 3 months, I showed you the Dow Jones divided by gold. I said, you're going to sub 1. That's your radar screen. You don't watch the hourly chart, the 5-minute chart. You're going to spook yourself out on a hyper dopamine thing, thinking you're clever, and you'll be shaken out of the trade, and you're going to be chasing back in at some localized high where you're then going to blow your account because you used leverage, because you missed out on some of the price behavior, and you're going to cock this up. You can be in a bull market and cock it up and actually end up with no money, less than you started with. It's quite easy with a bit of leverage and FOMO. And in the absence of method, emotionality fills the void. It is absolutely devastating if you're using leverage, and it will do quite some missed big days. It's often at its most negative point at a pause that it's about to have its biggest day in an out of the blue push. You should watch on the big time frame charts only sporadically. If you're watching too often and you're dropping the time zone too much, you're too big leverage wise. That's it. If you have leverage, and you're hunting for dopamine, that gets you into casino mindset. We don't want casino. You need to sit in for the full journey, because it's the top 20 days that will give you 80% of that return, potentially, or top 20 weeks if it's 3 years that you're in this position. You don't want to be out on them. And those are the weeks that will shock you out of the blue, that will come after you probably had a little bit of pullback at some new policy. So the goal is to be in and stay in. There will be, in terms of our community, what we do, opportunities with leverage trade and continuation patterns to build a bigger size and then tax that profits and stack. I've just taken on that daily HVF a vast sum and just bought new Blue Pot, which is investment hold. And it's already up from the profits of the run from 3,350 to borderline 3.8 level. So that's how we intend to turbocharge our stack. That's it. That's all I'm doing. There is no short trading at all. This is a macro bull, and it's a macro hold bull for the Blue Pot and the investment pot. And anything on discretionary that I make gets taxed into the Blue Pot, and it's conservative with stops so that I don't do any damage. And every asymmetric upside is much larger than what I'm risking, and more of them. This is the bull of the ages. Everybody's going to get out too soon. Everybody. Soon it'll be a talking point, and everybody will get out too soon, and then it'll scream up even faster. And that's something the silver guru says, David Morgan, who we've interviewed and you probably had on once or twice himself.
I had him on yesterday, actually.
Oh, brilliant. 80% sometimes of the move is made in the last 20%. This is what a parabola is all about. That's why I'm saying don't get off the train. The party gets hotter the deeper you get in. The naked girls only arrive after 12 o'clock and the free drinks. You're just having a nice ride and they're being polite and serving you the odd canape and champagne now. The beatbox, the DJ, the high-flying shows are all starting when you get into Twilight Zone. And you want to be on the party bus when that goes down, because that's when you really get to be happy. Now, someone who doesn't drink and take any other, it's an interesting analogy, but I want people to laugh and understand the metaphor. You need to be in. There's no other party you need to look at. Don't sit there looking over the fence. The greenest field is right here. You're not big enough. Your sole job is to stay in and to multiply your position in there soundly with moderate leverage, with method, which is what we look to help people achieve on themarketsniper.com and our YouTube channel. And we continue to do the accelerated stack. Miners, silver, platinum, and gold. The only thing I fear on miners is you've got to have certificates. And even if you have certificates, it's still slightly derivative to holding the metal in your hand. It might outperform though, and you should have some. But get your certificates and hope to hell you don't get nationalization or dilution or other trickery or massive capital gains. I like where I can buy where it's unregistered buy. You've bought and there's no government that knows you buy. So also where you can do that. Another reason, not be in the same country with the same passport, the same bank account, the same home address, the same everything, where they surveil you, they know everything about you, and every piece of paperwork is you. You need to have arbitrage. That's what we focus on. Build wealth preserve that wealth, secure optionality and freedom. That is it. Reset. This is a financial reset. This is foundational. A stock market crash and COVID, that's small beer to a debt and fiat-based complete absence of account on the major nations. We're talking Zimbabwe and Venezuela for an entire hemisphere. Try focus on that, because the poverty that came out of the Venezuela and the Zimbabwe comes for that entire area. The perception of wealth comes for that entire area. And where is the wealth per capital head count? Population size like this compared to the rest of the world, wealth much, much higher. They're coming to compress you. They're coming to compress you. And you'll have a rate spike to shake you out of all your leverage. You could have counterparty risk and the great taking, which is why every time I make great profits on the trading side, I bleed out into foundational holding pot. I don't want to build the trading pot too large, too fast. I want to keep taxing it down. The investment, the physical hold, is your safest thing. They have to send a man with a gun then. And then they have to send, if you like our community members, a man with a gun at a synchronized moment in 5 different locations, geographically, totally removed with different legal systems to entities, not just names, and all forms of things. You're hanging on to some of that. I'm not sure all our plans will work perfectly, but you're hanging on to some of that. That's how serious this gets. Get out of the West, get into gold, get deep into gold. Look, don't look left, don't look right. You've married the beauty queen. Right there. There's not another woman in the world that measures up. You're it. You're it. And you're going to be rich. And everyone's going to hate you because they're going to weaponize the sentiment. So don't fuck this up. Get in there, keep quiet, be discreet, max it out. Multi-generational opportunity on one of the biggest singular macro cyclical trends that ever going to happen. You don't have to look anywhere else. Take that from me. You can take it to the bank.
All right, guys, lock in. That was probably the most powerful message I've heard from you and pretty much from anyone else recently here, Francis. So great job. Where can people find you if they want to get in touch with you and get a dose of your work?
So we're watching all the HVF structures. We're trading that's going to be incredibly profitable. It's a sad fact that the speculators and the leverage longs are going to have incredible lives if they're doing it correctly and not blowing themselves up in what will be huge moves. And nurses and ordinary good vocational people that do amazing work. I didn't build this society. I didn't ask for it. But I intend to be a survivalist and a thrivalist in the society. We focus on that. You need more than ever to be in risk, all the right risks to maximize your wealth, because costs of things are going to be so high that the masses are going to be prohibitively kept out. That's how they'll create economic financial apartheid. You can't afford it, you can't have it. It'll, from medical care to organic meals and food, everything else. You either grow it yourself or you can pay for it. And that's going to apply to everything, including travel. So we need to build wealth. We need to protect and preserve that wealth and secure yourself optionality and freedoms that goes with being that wealth. That means multi-jurisdiction. That is our core message. That's what we focus on the market sniper and the crypto sniper. There will be opportunities there. We don't trust it, we know, but we'll take the money pragmatically. That's what we're all about. Book a call to have a chat if you want to find out more. Thanks for having me on, Danny. It's always great, and I appreciate your work that you're doing, and I want to thank you for giving platform to people that are also helping wake up the masses. This is such an important message. You've heard it, everybody. You've heard what I said, but it hasn't gone 5 levels of understanding conceptually. You may need to watch this video again. You need to change intrinsically your entire blueprint. You know, when you get cars and you make them go fast with higher HP, they retune, they re-blueprint them. Mm-hmm. You need a re-blueprinting for how you prioritize your wealth building, and gold ounces are it. Till next time, I'll catch you guys later. Thanks for having me on.
Great point. You may understand something from an intellectual level, but until you understand it from a being level, you're never going to really get it. So, Francis, thank you so much for coming on, my friend. Guys, if you enjoyed this podcast, drop us a like and comment. Go, Francis, go in the comment section. If you agreed or disagreed with anything we said, let me know. I do, in fact, read all the comments. So drop me your thoughts down below. Subscribe to the channel so you don't miss an episode. And by liking, subscribing, commenting, you really do help in helping promote this channel in the algorithm as well as this video. So if you want this message to get out to as many people as you possibly we can, then a little bit does go a long way. May not seem like it, but it certainly does, and it's free. But if you'd like to support me monetarily, then consider joining my Substack at capitalcosm.substack.com. Become a paying member and get access to all of my stuff early, ad-free, and uncensored for the videos that warranted, as well as the chance to ask my guests questions down the line, and check out our good affiliates and sponsors as well in the video description below. We've got a whole host of great products out there. Chris McIntosh's Capital Exploits Insider, JL Salente's Trends Journal, and so much more. Check them out. You help support the channel that way as well. Thank you so much for your time, guys, and I will catch you later. Bye.